Good morning, guys, and welcome to the show. Today is Monday, October 8th, 2018. If you're interested in me going over the markets and giving the current market indicators and stuff and charts and stuff, it's going to be in the latter part of the show. I want to talk about something first, and I'm going to talk about it for a few minutes. I want to talk about the U.S. dollar and the Fed. And we're going to get right to it. Let's open up the charts right here, and we'll take a look. Now, if you're not familiar with John Williams, he's got a site called Shadow Stats, and I would recommend you go over there because he's got the real statistics. They've been faking the statistics over the past number of years now. And they've been getting rather good at it, and all the numbers are basically fake numbers. But over at Shadow Stats, he's got the real numbers over there. Oh, they must just love him, but he doesn't get enough. Good God, I hate these pop-up ads. They just explode in my ears. Anyway, he's got the real numbers over there. The real McCoy. And he says the Fed is killing the economy. And basically it boils down. I'm telling you, they're an awful annoyance. These pop-up ads, they come on Zero Hedge. You know what? I'm going to get off of Zero Hedge here. And I'm going to go to the bond rates here, this bond rate chart, because we're not going to get those stupid pop-up ads here. Listen, I'm going to tell you what. Zero Hedge is going to start, if they don't do something about that, they're going to start losing customers because people don't want to be on there, and all of a sudden, boom! You know, I mean, it's hard to hurt when they come on there with an ad like that. It's ridiculous, too. And you're looking at something on Zero Hedge, and you're saying, hey, you know, this looks interesting. All of a sudden, boom, 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 boom! And, you know, you're like, wow, I don't think I'll go to Zero Hedge for a while because they got some sort of a pop-up ad on there that explodes in your ears. Anyway, suffice to say, bond yields are rising, and the Fed is, John Williams is giving the real numbers, and the Fed is getting themselves boxed in here. They're boxed into a corner. They're complaining about the Fed raising interest rates, but the Fed actually has to raise interest rates. And the reason why is as time has progressed, originally, going back a few years ago, it was enough to suppress the price of gold and silver to support the dollar. Right? The dollar was not going to collapse. What's happened is the petrodollar is being eroded on the petro end of the scheme, I don't understand why. There we go. Okay. Okay, we've got rid of it, guys. It's dead. I squished it. It was a bug. I squished it. What a pain in the butt that was. Oh, my God. And that music was so awful. What are they trying to achieve? Are they trying to sell a product? Anyway, back to what we're talking about. The Fed... That music is screwing up my show, honest to God. The Fed has to raise interest rates to support the dollar. And at one time, it was not that hard because they could just suppress the price of gold and silver to support the dollar. Then later, what happened was they had to increase the price or lower the price of oil to support the dollar. Now, it's interesting. Most people don't recognize that they actually did that. And the reason why is because they don't see how they did it. What they did is they made risky investments across America through the banking system of the banking system. They were able to extend loans to these oil companies who are going to do fracking. all across North America. And what this did was it made America an oil-producing state. Well, America really has been an oil-producing state, but it tapered into decline because these wells went empty and dry all across West Texas and places like that. The oil wells have been capped, but they were able to reopen these wells. They were able to go in and repressurize them and make America great again through oil. America became an oil producer, and they still are, but there's a problem with this. It's called the Red Queen. And that problem is these oil wells do not last. They don't last. They're not like the Saudi wells. They're not like the original wells that were in West Texas. That back in the old days when they used to dig an oil well, the oil would come gushing out, you know. Anyway, I'm straying from the topic matter. They were able to, the Fed was able to work through the banking system and extend loans to these shale oil frackers all across America. And these loans, in turn, they paid off. Because when America became an oil producer, of course, they created a glut on the world's oil scene. And that glut translated into dropping prices. It dropped all the way down to 29 bucks. And this was all in support of the dollar. Again. So this supported the dollar for a while. But all these things to support the dollar, which they continued to do, suppress the price of gold and silver, supported the dollar. Lowering the price of oil supported the dollar. It all supported the dollar, but in the end, all of it started to not work so good. The dollar was going to lose ground anyway, because it's being undermined as a petrodollar. See, you have to go back to the dollar being the king dollar and being the petrodollar, and that's why the dollar is the dollar. Is they took it off in 1971. They took it off the gold standard, and it became the petrodollar. The dollar was backed by oil. Now that's being eroded. So what's the dollar going to be backed by? If originally the dollar was backed by gold, and they took it off of gold and they put it on oil, and then the dollar was backed by oil. And now if that's being eroded and it's not backed by oil anymore, what's it backed by? It's purely fiat at that point. Well, we all know that purely fiat currencies, they go back to their intrinsic value, which is zero, absolute zero. So here's the thing. The Fed is caught in a trap. And this trap is that they have to continue to support the dollar, and now there's only one option left available to them. Raising interest rates and pulling dollars out of the system. In other words, making dollars more scarce. But there's a problem with this. The emerging markets are in deep. They're in deep. And if they withdraw liquidity out of the system, the emerging markets are going to have much more hard time paying. Plus, if they raise interest rates at the same time, this is going to create an emerging market crisis. It's also going to create other huge, monstrous problems within the system. But they can't not do it. If they don't do it, the dollar is going to start to fall down the hill. And the dollar now at this point, and this is the real nitty-gritty of what I wanted to talk about. The dollar has become unstable. The dollar's unstable. The dollar, if they continue on with this process, the dollar's going to continue to rise. That's the instability. And if they withdraw the process, the dollar's going to crash. So the dollar is unstable. It's not going to stay on a static line like it is now. The dollar is going to rise or it's going to fall. And this is where we're at. We're at an unstable dollar. Boy, I've been getting an awful lot of interruptions in my show this morning off of my computer, and it's a pain in the butt. Anyway. That's what I wanted to say, and now we're going to move on with taking a look at the market. So first thing we're going to do is take a look at cryptocurrency here. We're getting a move upwards in cryptocurrency. It's about the only thing that's really moving up this morning. It's up to 6607 as we speak, and cryptocurrency is trying to crawl out of the hole, basically. It's moving very slowly in an upwards trend, and this reversal started right back here at around no, it was back around here. Reversal started. So if we take a look at it, it's around 61.64, and that's the point I noticed that we had the reversal. If we chart it along from 61.64 along here, what we'll see is the lows are higher. The lows started moving higher, and so that's when I seen the trend reversal in cryptocurrency. Now, I can't say we're out of the bear market yet until we break past 8,500. And I'll tell you what I'm expecting. Until we get the big market crash, I'm expecting Bitcoin to continue its move and its trend upwards, and in fact, probably increase the pace upwards in price before we get the big market crash. Now, what's happening right now is we've had a pulse up in interest rates, almost like a wave. It's a wave of increasing interest rates. I think we've crested that wave now, and I think that they're going to back off for a little while. The market responded to it somewhat, but I think the market is going to settle back down now for just a little bit. And then the next wave that comes in of this is going to take us over the 3.25%. It's probably going to take us up to 3.35, 3.40 on the U.S. 10-year. That's the next wave. And so I think we're okay until the next wave comes. But I don't think the next wave's a long ways away. It's probably going to come within a matter of weeks. The next wave. The next wave, I think, is the one that's going to cause the most problems. So until then, Bitcoin's going to continue to creep up in price. And the stock market I don't think we're in for the big crash quite yet. I think it's down the road a little ways. But when the big crash occurs in the stock market, what's going to happen to cryptocurrencies? Well, I've often thought that when the stock market goes down below 20,000, that they'll run out of cryptocurrencies and head for safe haven assets. But I've been thinking about it lately and thinking about that a lot, and I'm not completely sure that's what they'll do. It depends on how hot the cryptocurrency market actually is at that particular point in time. If it's really hot, the cryptocurrency market, they might not dump it. And I know I said I thought they would dump it when the stock market goes below 20,000. We'll have to wait and see how hot the market is at that particular point in time. It's a tricky call. I'll just put it that way. Okay, now we're going to move on to cryptocurrency market capitalizations right now. And what we're looking at is, I have to go up here, $219 billion, 52.2% Bitcoin dominance. And most of the coins are going into the green this morning. Now let's take a look at the Dow Jones. Here's the Dow Jones from the last day. She was down 180 points. We're waiting for her to open. She's opening in 4 minutes from now. And I'll tell you what I'm expecting is, I'm expecting it's not a real big down day. Now, I could be wrong, and I'm putting my neck on the line by saying it before the market opens. Maybe it'll be a huge down day for all I know. But I'm not really expecting it to go that much down today, really, honestly, because I'm expecting the bond market to level off now, and that's the reason why. I think the bond market's had its big move, and I think now it's going to back off for a little while, cool off for a little while it waits for its next big move. That's what I'm thinking anyway. We'll see what really happens in real time in only another 3 more minutes, and let's see how right I am. Okay, so let's move on to the crude oil market. She's down $1.02, 1.37%, which is a fair little move down. Commodities are taking a beating. Take a look here at silver today. we've taken a tremendous beating. I mean, they're just pounding the hell out of silver. I thought the beatings were over, and I thought that they have to support silver because to keep the dollar from heating up too fast. But evidently they're not. They're going to let the dollar heat up. If we take a look at the dollar today, we're going to see the dollar's heating up. But just wait, we're coming there. We're getting there. Bonds and rates today hasn't really opened yet. It's still on the U.S. 10-year, still 3.23. So it's almost up to my mark. I don't think it's going to achieve my mark until later. I could be wrong. We're going to wait and see on that. Now, the U.S. dollar index here. This is the big one. We are up to 96 on the U.S. dollar index. Boys, oh boys, the emerging markets are going to be hurting soon. I'm going to tell you, they're going to be taking a pounding. We still got 2 minutes until the market opens up this morning, and tomorrow morning I'll find out where we're at with this. So listen, thank you guys for listening to my report, and like and subscribe, and we'll catch you in the next show tomorrow morning. Bye bye, guys.